on our Facebook channel and LinkedIn channel. Hey everyone, it's Joe Bladek here again today. It's September the 4th, and it's a big day today in the mortgage field because we have another interest rate announcement happening today, and it's a big one. It's a big one that a lot of people have been anticipating because rates have been coming down this year so far, and they've been coming down this year quite regularly. We had a rate decrease on July 24th, and we had a rate decrease as well prior to that, a quarter point and a quarter point. So the fact that we have 2 quarter point decreases, we've entered into a rate decrease cycle. And if you guys have been following my channel, we've been following the interest rates in Canada as they've been at all-time lows, crept right back up. We've seen the greatest increase in interest rates that we've seen in a lifetime. And now we are seeing Canada enter a rate decrease cycle. So if you have any questions here as I'm going through my episode this morning on Canadian Mortgage Weekly, episode 181, which I'm so pumped that you guys are all here today to share with me today. Feel free to pop your questions into the chat. I'll be making sure I watch the chat here online. And if I don't catch your question here, you can always email me at joe@joebladek.com, or you can always send me a direct message on social media, and I'd be happy to do that. There's a lot of people that end up having questions about these rate announcements, and the last thing I want to do is to let you guys go without answering your questions. So here we go with today's live podcast for the interest rate announcement for September the 4th. Do you guys think rates are going up today, or do you guys think rates are going down today, or do you guys think rates are staying the same today? That's going to be the real question here today. And one of the things that I like to cover off here is some of the news that we've been hearing in Canada. Specifically, I like to talk about things like the inflation rate and the unemployment rate, because those have quite a large impact on what's happening in Canada on the government's interest rate policy. So if we look today at the inflation rate, if we can just bring that up here today, the most current inflation rate today is sitting at 2.5%, and that is for July. We saw a decrease of inflation to 2.7% in June and a 2.9% in May. So May 2.9, June 2.7, July 2.5. So it's like we're going down a little bit at a time, which is fantastic. And the Bank of Canada was really looking for that 2% mark when they were looking at lowering rates. And we are at that overall 2% mark now. We are sitting where we need to be. So I don't think rates will continue to go up at this time because inflation is not trending upwards. I don't think rates have any real basis on staying high because we are trending downwards. So I think inflation here is showing us that the markers for inflation are showing a rate decrease is up ahead. So I hope that is correct. I did check with my mascot this morning. She has not been on my channel the last few times. It's been hard to get her on. But I did check with her today, and she was predicting interest rates would go down. And if you may not remember, my mascot her name is Interest Rate. She's my guinea pig. She is still around. She just took a break while I ended up not making episodes here for a few months. And if you guys noticed that, I became a little bit sick here, so I'm back now, and just had some health problems there for a little while. So inflation down to 2.5%. So huge, great news for Canadians there. If you're a mortgage holder in Canada and are seeing these inflation numbers coming down, then you should be happy, because this means that rates will continue their rate decrease cycle for the next little while. All right, so if we take a look at the United States inflation rate, it's also been heading down, and it's at 2.9% in July, a little higher than Canada's, but it's had a lot more of consecutive months of decrease. So we have 3.5% in March, 3.4% in April, 3.3% in May, 3% in June, and 2.9% in July. So great news on the United States inflation front. Inflation in the United States has been decreasing as well. And Canada finds a lot of its economic gets a lot of its economic like piggybacks on the United States for its economic headwinds. So we see what's happening in the United States, we can almost guarantee that that is also happening in Canada. So rates on inflation have been decreasing in the United States, and we see that that's also been happening in Canada. It's actually been pretty stable in Canada. We've seen inflation in that 2% mark since the beginning of 2024, when inflation hit 2.9% in January. All right, so the rate announcement is almost here today. We will be talking about how this rate announcement affects your mortgage and affects your lines of credit and affects your borrowing products in just a moment here. We will have the official result released live here from the Bank of Canada in approximately 10 minutes here. So just hang tight. Around 9:45, we should see the Bank of Canada's interest rate announcement come out. And the last thing I like to check is the 5-year bond yield. And the 5-year bond yield is the market predicting where fixed rates are going to be in the next 5 years, or for the next 5 years. So for the 5-year fixed rate. And it's currently at 2.9%. 2.9% does represent the lowest point in the last 1 month time frame, and the lowest point in the last, well, it's not quite at the lowest point in the 3-month time frame. We had a lower point on August 2nd, 2024, but we possibly can break it today. We just need to go down another 0.001, and then we'll be able to break the record in August. And if we look at a 6-month time frame, that will be if we break that record on August 2nd, that will be the lowest 5-year bond yield in the last 6-month time frame, the last 1-year time frame, and not the last 3-year time frame. Really, the last time rates were this low on the 5-year bond yield, we can go back to, they were hovering around this time middle of last year, and then they were also hovering around this middle of 2022. So it's interesting to see how the 5-year bond yield has hovered around this spot for about 2 years now in the summertime. So interesting to see that. So we've covered off now the bond yield. It's been trending downwards. The inflation rate, it's been trending downwards. And we also are going to pop in and check the unemployment rate now and see which way it's been trending, to see what I think will happen with interest rates today, and to see if interest rate, my mascot, is correct. So let's take a look here at the monthly jobs report from Canada and see if the unemployment rate has gone up or not. So looking at this, we have had looks like unemployment in July has remained stagnant at 6.4%. We did have unemployment hit 6.4% also in June of 2024. Overall, 6.4% does represent a 0% change from the month prior. However, compared to the prior year, we are looking at a 1% increase overall in the unemployment rate from last year July to this year July. So 1% jump is quite a large jump in unemployment. If we really look at it, then if it continues going this direction, then we could see unemployment hit even higher levels next year, because as it starts to ramp up, it starts to ramp up pretty quickly. So the Bank of Canada has a decision to make today Does it continue to cut rates in order to stop the unemployment from increasing rampantly? Or does it continue to tighten slowly or keep rates where they are at to try to maintain some sort of balance? So, unemployment today, I would say, in addition to bond yield and um, the inflation rate, the unemployment rate is indicating no change in rates or possibly a rate decrease since unemployment rate has been increasing slowly. Let's see if the Bank of Canada has in fact released its policy interest rate for today. Not yet, but we will have that information in about 3 more minutes. So just hang tight and we'll be able to release that new Bank of Canada interest rate announcement here to you today. If you're just joining me here today, thanks again for watching. My name is Joe Bladdock. This is episode 181 of Canadian Mortgage Weekly. I've been running this podcast since the start of COVID pretty much. And we've been going strong now for about 4 years. And we are interested today to see what has happened with the Bank of Canada and what they have decided to do with interest rates. What have articles been saying? That's another thing I like to cover off here on Canadian Mortgage Weekly. What are the news articles saying about interest rates and where are they headed? So let's look at that here. Interest rates. I know that over the last few weeks, we've been seeing articles saying that Canada is going to need to cut rates faster than originally planned, and that rates will possibly be lower sooner versus higher for longer. So looks like Global News Toronto is saying the U.S. Fed is on deck to cut rates, but Canada is expected to cut rates again. The Globe and Mail says Bank of Canada widely expected to cut interest rates for a third consecutive time, and that will be a third consecutive time. We saw even last time, July 24th, Bank of Canada did cut rates. National Post, Bank of Canada set to announce third consecutive rate cut today. City News, Bank of Canada set to announce interest rate cut today. CBC.ca, expect interest rates, inflation to keep coming down. And then Canadian Mortgage Trends, they indicate that expected to extend its rate cut streak on Wednesday. Do we have a decision yet? No, we don't have a decision yet, everybody, but we are about a minute or two away from the Bank of Canada's decision here on the interest rate for September 4th, 2024. If you're just joining me here now, make sure you like and subscribe to this channel. I do a live interest rate announcement every time the Bank of Canada has a interest rate announcement. And sometimes I do other episodes as well that can help those who are getting a mortgage or having a mortgage in Canada get the best possible deal as well as the best possible service. So let's see if the Bank of Canada has released its policy interest rates. And keep in mind the next one, today is July 24th. No, today is September the 4th, but the next one is going to be October 23rd. So we'll have to see what happens next time. Okay, so we have the news here right in front of us today. The Bank of Canada has released its update, and we've had three ways this could have gone. We could have gone up, interest rates could have gone up, which, as we have talked about for the last 15 minutes, inflation is down, unemployment is up, and bond yields are down, indicating that the market thinks that rates are coming down and indicating that because unemployment is up, rates should come down. So the Bank of Canada released that the interest rate has gone down another 25 basis points. Wow. So what does that mean for all of us today? Well, it definitely means a few things are going to change. One of those things is the Bank of Canada policy rate now. It's changed. It's no longer 4.5%. It's 4.25%. That doesn't really mean much to people like you and I, because the Bank of Canada policy rate is not the rate that we're getting, but it is the rate that the bank is lending money out to other banks. But the policy rate has decreased for a third consecutive time by 0.25%. We are seeing this rate decrease cycle play out as expected. We are seeing as inflation has been coming down, and as the bond yields have been lowering, and how unemployment has been rising, we have now seen the Bank of Canada has decreased the rates by 0.25%. We actually had heard that in the news, I've been hearing all week and last week that the Bank of Canada is expected to decrease rates faster and more aggressively than originally thought. So the fact that we are seeing a 0.25% decrease in September is actually the smallest decrease we could possibly see from the Bank of Canada, which to me makes it seem like it's a conservative decrease. And I agree with you, Herman. Thanks for joining us today. He has commented that it's a conservative move, and it is a conservative move. It's one of these moves that it shows the public that rates are in a rate decrease cycle, but it doesn't really inspire anything. I do remember, though, at the July 24th rate decrease, we did see that when rates decreased on July 24th, we did see some increased housing activity occur over the next 2 to 3 weeks, which helped a little bit of the summer buzz. But this third consecutive rate decrease of 0.25% should increase the buzz in the housing market, now having 3 consecutive decreases. And especially with the fall now and everyone back to school, parents are going to want to make a change. Those that have been wanting to make a change for a while are really going to consider that now going forward, because kids are in school, rates have come down. They're going to reach out to their mortgage professional to see, does this change how much I can afford? What are my monthly payments now? What should I expect when I move? And that's exactly, if you've been thinking about this, you should do as well today. And my name is Joe Bladek. I've been in the industry now for 14 years and can help anyone across Ontario, across Canada. So you can always direct message me on Facebook, LinkedIn, TikTok, Instagram, wherever you're seeing this broadcast of my podcast. And if you're not ready yet, that's okay. You can you can comment, you can follow this podcast to be in the know and stay updated with what's happening in mortgages. So yes, 0.25% is the update from the Bank of Canada this morning. They have decreased interest rates by 0.25%. That also means actually that the Bank of Canada is going to be decreasing the prime rate for everybody. So what's the prime rate going to be now? It's very interesting to see that the Bank of Canada has taken this conservative approach to decrease rates by 0.25%. But now that prime rate had started at 7.2% in April, went down to 6.95% in July, and then July 24th went down to 6.7%. We are now going to be sitting with a prime rate at 6.45%. So that is great news. And for everyone else that's commenting, thanks, Andrew, for the heads up comment there. Yes, it's great news for everybody. Anyone who's thinking about selling today and has been thinking about, am I going to get the most from my home? I don't know if I'm going to be able to get what I want for my home. Well, with these interest rates coming down now, it's going to change a lot of the wheels in the marketplace. A lot of people now that could afford, say, a $500,000 home prior will now be able to afford a higher priced home. And those who have been able to afford a $800,000 home prior to this will now be able to increase their affordability budget. Because every time rates go down, the payments go down. And because the payments go down, people can afford more mortgage. So with the rates coming down now and prime rate now sitting at 6.45%, we should definitely see everyone's affordability increase. So that's one thing that's going to happen is affordability now in Canada across the board is going to increase, and everyone is going to be able to afford just a little bit more mortgage than prior thought. Another thing that's going to happen is that anyone who has a home equity line of credit, well, those are based off the Bank of Canada interest rate. And every time the Bank of Canada makes a change, whether it's up or down, it affects HELOCs directly. HELOCs, if you're just joining me now, are a line of credit account that is connected to your property. And it's usually tied to your mortgage, either as a combined product or a separate product with the same lender, sometimes different lender, but usually the same lender. And it's used for emergencies, renovations, travel, whatever you need the money for. But the thing is that interest rate is tied to the Bank of Canada interest rate. So with prime rate now decreasing from 6.7 to 6.45%, it's going to decrease those line of credit payments for everyone who has a HELOC. So that minimum payment, as a result, now will drop. And if you've been making a payment regularly on your HELOC of say $1,000 or $2,000, the split allocation between interest and principal will also change. More now will go to principal and less will go towards interest. So Herman says, can we be hitting 3.75% by the end of the year? I mean, it's very aggressive, but it is possible. There are a few metrics that the Bank of Canada will need to see to get to that point. And if you're talking about variable rates hitting 3.75% or prime rate hitting 3.5% through 3.7, or just the fixed rates hitting 3.75%, I think we might see the fixed rates hit 3.75 before variable or prime does. But that would require maybe 2 or 3 more interest rate cuts if the Bank of Canada goes quarter by quarter. So there's some brokers out there, though, that are estimating that we should be able to get interest rates on the fixed rate side down to the 3% range by 2026. That's quite a far ways away. But if you're looking at getting a lower interest rate but buying now, the typical strategy I see with the agents out there that I know is that buying now and taking a short-term mortgage and refinancing in 1 or 2 years when rates come down gives you an opportunity to buy at a slightly reduced price, because right now market is not really hot, and then refinance at a slightly better rate down the road, getting the best of both worlds. Whereas if you buy later, you're only getting the better rate, but still the higher price, because as rates go down, prices tend to go up. Got another question coming in. This one is from, let's see here, Asfar, if I said that name correctly. So to qualify for, we got a question here. The question is, how much income do we need to qualify for a $1.2 million mortgage if you were to put 20% down? So there's a couple different ways that can be put together. As a mortgage broker, I don't just work with the big 5 banks, the TD, the Scotiabank, the Bank of Montreal, the RBCs, the CIBCs, the national banks. It's not that I just work with those, but I work with all the other lending institutions in Canada. So the income, I'm going to say, is not going to be the same for all the different lenders, because each lender has a different way of calculating it. But if you need a $1.2 million mortgage and you're putting 25% down, you're going to need an income with a traditional like big 5 lender of around $250,000 to $300,000 annually. However, there are other lenders out there that are so-called alternative lenders or B lenders. The caveat is that they lend for a higher amount, and in exchange, the rate might be slightly higher than what you're getting at your big five banks. So say if the fixed rate right now with the big five banks is in the high fours, you might be paying another 1% on top of that. If you want to do that, then you can increase your borrowing power further. And you could probably reduce the income required to maybe 150 or 200,000 in exchange for that interest rate. But if you're looking at buying if you're looking at buying a home and need a $1.2 million mortgage, you need an income of about $200,000 to $250,000 to hit $1.2 million in mortgages. Okay, so we have a couple more rate hikes coming up, but as I mentioned here, if you're just joining me here today, we have the rate announcement today for the Bank of Canada. It came out as it's a decrease of 0.25%. It's huge news across Canada. We are going to see HELOCs, minimum payments now dropping slightly. We're going to see unsecured lines of credit, those payments dropping slightly because those interest rates will have gone down as well. And anyone who has a variable rate car loan or a variable rate credit card, those interest to principal adjustments will change as well. So huge news there. We could see, like, if we look at the next two rate announcements, thank you very much for those rate announcements there in the comments. We have October 23rd and December 11th as the next final two rate announcements for 2024. And with the way that we've been seeing inflation's trending and the way we've been seeing the bond yield trending and the way we've been seeing unemployment trending, if these trends continue the way they have been, then I could see the rates coming down again next year, not next year, on October 23rd. And that would be huge news for us if we saw rates come down again in October on the 23rd. And then if those trends even continue further, we may or may not see a rate decrease on December the 11th. If anything, we might see a rate decrease on the 11th of December instead of October 23rd, because there's more time between December 11th and September the 4th versus October 23rd and September the 4th. But if we are going to look at how the Bank of Canada is going to make its decision next time, I think a lot of it will have to do with how the inflation is going, which we will see inflation released next month's inflation will come out. Actually, we should see August inflation come out on September 17th. And then if we wait until December to see what happens with the interest rates, then the Bank of Canada will also have October's numbers to analyze as well if it waits till December. Okay. So a lot of people here on my comments now are asking me what's happening with rates and what they should lock into if their term is coming due in the next little while. And this really depends on which way you're going with your home ownership goals for the next 5 years and where you think rates are headed in the next 5 years. What I'll do is talk a little bit about reasons for which terms. So a lot of people are doing a 5-year fixed right now. The ones that are doing a 5-year fixed right now are doing it because they have to, or they are very conservative. They don't want to see another rate increase in the next 5 years. They just want a same payment every time they make a payment for the next 5 years, and that is fine. I mean, rates might come down, and you might be in a situation where the rate you have is higher than what you could get in 3 to 4 years. But it does give you some peace of mind in the sense that rates will stay the same for 5 years. But if you're coming due in March, we might see still 1 or 2 more rate decreases by the These comments are brutal. We will see that we might have one or two more rate decreases by March. And if that's the case, you might even consider a 1-year fixed or a variable rate. And the reason why I say that is if you think rates are also going to come down by March and then continue going down after, then you might want to do 1-year fixed and then lock in again March 2025 for where rates are at. No, you're going to be maturing March 2025 and then lock in again at March 2026 when rates have bottomed out. Or you can look at taking a variable rate mortgage in March and then locking in when you think rates have bottomed out. But if you're like a lot of other people in Canada and don't like talking about rates, thinking about rates, or watching rates in Canada, then a 3 or 5 year fixed rate is usually a very balanced move, especially the 3-year rate right now. Because if you take a 3-year fixed rate, you're going to lock in right now at a rate that's very close to the 5-year fixed rate. And then in 3 years, be at a situation where maybe rates have gone down and you can lock in again at a lower rate. Okay, well, thank you for your questions so far. If you're just joining me here today, this is Joe Bladek, episode 181 for Canadian Mortgage Weekly, talking about the interest rate announcement for Canada. We did see the rates go down by 0.25% today. And with rates coming down by 0.25% today, prime rate is now dropped from 6.7% to 6.45%. You know what? I don't mind milk at all. And we have some comments here. They're just brutal, but can we have another question here? I only declare income of $86,000. Is there a way to qualify for $1 million mortgage because of the gross and net of my business? So that's a really good question. If you have a business that you're running and your net on your taxes is different than your gross income, then yes, as long as you're willing to consider a self-employed lender. A lot of these lenders look at your bank statement income and not your tax return income. Net is $250,000. So that is great. That's great. The banks will essentially look at your bank statements and see your cash deposits or your invoice deposits from your customers, and over a 12-month period, add up what your deposits are and look at the income that way instead of over a 12-month period, look at your tax returns. So if looking at your bank statements might be a better way to do that, then definitely reach out to me and we can continue that conversation a little bit further, because having the bank statements to show the bank what your income is can sometimes help you qualify for 4 to 5 times as much money, because the declared amounts or the net income on the income tax can be drastically different than what the bank will qualify you at. And huge thing. Thing is though, only thing I gotta say is the big 5 banks do not do it that way. You gotta go to a mortgage broker. So whether you have a mortgage broker or you want to contact me, either way is fine. I've been in the business now for 14 years. And I'm a mortgage broker that works across Ontario and can help anyone in Canada. So thank you so much for all the questions that are coming in. This has been a fantastic episode. These comments, some of them are just brutal right now. And oh my goodness, here we got another question here. All right. So yes, thank you, Andrew, for that. So gross income versus net income, way different. There are lenders that will look at the gross income and analyze your bank statements over the last 12 months. All right, so this episode has gone on for a little longer than 30 minutes, which I appreciate all your questions. There's a couple here comments about how I look like a failed wrestler, and maybe I should take up wrestling. That might work out well for me. So, unknown caller. Anyhow, we have here some calls coming in here. We're going to have to ignore those for a moment. But as you're just joining me here today, today's was the Bank of Canada interest rate announcement for September the 4th, 2024. We did see rates come down slightly to 0.25%, decrease sitting now prime rate at 6.45%, and the policy rate with Bank of Canada sitting at 4.25%. And the going comments here on the Bank of Canada are saying that the inflationary pressures have warranted a further decrease to this 4.25%, and that economic growth is looks like 2.1% in the second quarter of growth. So that's pretty good there too. Anyway, thanks for watching me today. My name is Joe Bladdock. I'm a mortgage broker in Barrie, Ontario. All right. And we'll just there we go. Now the sound is working. So the pre-con market, just to give you some insight there, is there has been a lot of condos that have come on the market in Toronto over the last few years that were in the process of being built, as well as a lot of new condos coming to market that need to be sold so they can be built. And then those two are competing. The existing condos that people are trying to resell, that are just coming online, that are completed but are brand new, versus the ones that are not built yet, shovel's not in the ground yet, but they're pre-construction. It's like the two are competing, and a lot of the people that have bought condos 3, 5, 6 years ago are selling them for the same or maybe less than what the new condos are being sold for. So that's why the condo market's not doing so well. I would suggest talking to an agent to get their opinion, as well as talk to, If you're looking at buying a condo, make sure you know why the person's selling, if they're flipping, or if they own it already and are trying to sell it. There's going to be a lot of factors. And if you own a condo, it might not be the greatest time to sell. I got to be honest. You need to talk to an agent about that, though, because I'm not the expert in that. I can definitely get you the mortgage in that. As far as the selling, buying, not too sure. But if you're looking at buying a condo, this is a great time because a lot of people are selling it for a lot less than what they paid for it, for a number of different reasons right now, and that's across the GTA. Thanks for watching again, everyone. My name is Joe Bladek. If you have any questions to do with interest rates or anything like that, I'm a mortgage broker. Been working in Canada for 14 years, specifically in Ontario. I work remotely primarily. I can help anyone that is looking for a mortgage get their mortgage completed. If you're looking at getting a renewal done and your renewal rate is coming in significantly higher, make sure you reach out to me for a second opinion. We can look at your mortgage and give you an opinion on whether or not your rate that you've been offered is competitive.